For more on the Fed Minutes, let's bring in Adolfo Laurenti, Deputy Chief Economist at Mesirow Financial. Mr. Laurenti is the author of Themes on the Global Markets, which provides insight into trends and issues for the global economy. And he joins us from his office in Chicago. Mr. Laurenti, welcome to Bottom Line. You just heard my colleague Lizzie O'Leary summing up the minutes. What's your take?
I think it's very interesting that a possibility for QE3 have been discussed so openly. Remember, at the time of this meeting, we had not seen the employment report yet, and we were all hoping that the soft patch in the U.S. economy would just prove to be a soft patch, and we were hoping for reacceleration in the second half. So it's very interesting that such a discussion for additional quantitative easing was discussed so transparently back on June 22nd.
Sir, then talk to me about the inflation risks. Was that the driver, perhaps, of that discussion, that divided discussion, apparently, on the need for more policy accommodation, as they put it?
Well, if you go back to the previous meeting, I think, actually, I think that Chairman Bernanke was quite clear on that in the press conference that followed the June 22nd meeting. The major driver for quantitative easing, too, was a downside risk on inflation. Basically, the Fed wanted to buy insurance against deflation. Right now, I don't see the risk in deflation in the card. Again, Chairman Bernanke at the press conference made very clear that the QE3 would not be very likely as long as inflation stayed at the current level, which is not warming up yet, but it's clearly not in deflationary zone either. So it's very interesting that despite this background, some members of the FOMC were still going out and suggesting that QE3 might be in the making.
Yeah. Well, Mr. Laurenti, then let's talk about, these minutes. They obviously came out, but this was of a meeting that happened way before we got the latest jobs report, and that very dismal jobs report on Friday, about 18,000 jobs. That was the figure. Where do Fed officials go from here, given the bleakness of that jobs report?
That's very interesting. We are of the view that this is the result of that soft patch of the temporary factor. I think the Federal Reserve also hinted to temporary factors in many occasions. So if that is the case, we hope to see reacceleration both in economic activity growth and job creation starting in July. And that should really somewhat put in context. I think the most worrisome scenario would be a scenario where job creation remains subdued in the months and ahead and during the summer, in which case we may realize that maybe it was not just temporary factors holding back the economy. But again, I do not attach much probability to such an outcome. I want to be optimistic. I want to believe that this was indeed a temporary event and that a reacceleration will take place in the second half. And that will color as well the discussion within the Federal Open Market Committee.
Mr. Laurenti, the Fed Chairman Ben Bernanke, he's going to be speaking tomorrow. Talk to me about the specter then of this debt ceiling debate that's going on in Washington. Where does that place the Fed?
In a hard place, definitely, because we all understand that there is the need to get something done in Washington, D.C. I perfectly understand the ideology driving both parties in this discussion, but I think the stakes are very, very high, especially at the time in which globally you see investors getting very concerned about public finances, maybe just the smaller European countries, but Italy has been in the storm for the past couple of days. I think it would be extremely dangerous for the United States to take a gamble and just for political bickering to go to a technical default. Now, I think there are some technical measures that can be put in place to diminish the impact, but what you cannot really manage is the confidence of global markets in our currency and in our debt. And that's where we need to do something. We cannot play with the global confidence in the dollar and in the treasury debt.
Adolfo Laurenti is Deputy Chief Economist, Mesirow Financial, joining us from Chicago. Mr. Laurenti, thank you so much for your time and your expertise today. We appreciate it.